So we made it through week 29 here, $13,206. We collected $99 in premium, and we are down $158 on the week. That's negative 1.18%. That's exactly what we gained the previous week in week 28. So we pretty much gave back what we gained the week before. Not a problem though. The market is correcting right now. We are down. The S&P 500 is below the 21-day moving average. We are at a pullback area here. And so to see that we've only lost this much is much different than where we were the last time the S&P 500 had pulled back a little bit. We are on track. We still maintain a net liquidation above this trend line, this target for $16,000. That's what we're trying to get by the end of this year. That's how much I had at the beginning of this year. So losing half of my account, trying to do risky things, using my entire portfolio as basically like a just trying new things all the time, didn't work out very well. We can see that I was down 32%. It's good to see that I am at least recouping some of that back, thanks to Tesla ripping up there. But we want to be able to be steady and have a successful strategy, trading options, and seeing this trend continue to go up past $16,000. So overall, not a terrible week. We were green for the last like 3 or 4 weeks here. And so it's good to see that we are still holding our levels. Looking at the daily chart, it can be alarming, but on the weekly chart, we are still above that 8 EMA. The trend lines are still going up, and we're pretty much just settling down here. So what I think we're going to see here in the next couple weeks, unless something crazy happens, we're going to be in consolidation mode. As long as we're above that 544.75, I think that's what that says on the 8 EMA, I think we're going to be in okay shape here. So we're going to need more time to decide and see what the future is going to hold for the S&P 500. We closed at 548.99, so we are pulling back, but it's not an alarming pullback. This area right here, these 3 red candles, that was where I lost half of my account. And so the situation is a lot different for me now. My buying power usage is 60%, and that's with T-Flow. That's just money that I've got in just because I have the buying power to do that. My probability of profit on my portfolio is 71%, and whenever it was pulling back before, when I lost half my account, it was like 0. So I'm in a better position here, managing risk, and we'll see what happens here. I mean, we could pull back to the 21-day on the weekly chart just like we did back in April and May. Time will tell on that. We're not totally sure. My positions that I have, so let's take a look at the positions that I opened and managed this week. I rolled my Palantir, Chewy, Hood, Uber, and then I opened up another Hood position as well. So that's on the credit spread strategy. And Uber actually closed on my credit spread strategy. We'll get into that here in just a minute. The other thing I did on my cash account was open up a small cap stock. So I bought 32 shares of Fubo TV. I just wanted to get some exposure. I had like $50 in my cash account, and I just thought, well, I'll just throw 32 shares here at Fubo, hold on to it long term, and just see what happens, right? So I'm not really worried about it. It's $50, and if it rips up, great. If it doesn't, it goes bankrupt, man, I lost $50, right? So it's not the end of the world, but I did want to get some exposure there on some small cap stocks. And so I may, keep an eye out for those if there's opportunity there. So time will tell. Just kind of keep my eye open and see what exposure I want to some of those small cap positions. So I actually closed a position on Uber this week. So we have a little bit of information. I collected 50% profit, closed it at 16 cents. And so I have a positive trade. It's a winner, $17. And it took 6 days for that to close. Hood looks like it's on the way to close. So we're getting close there. The IVR, the implied volatility, is affecting my ability to close it because the IVR is going up. That's causing the option prices to go up. NVIDIA, it's actually in the money. This could actually be a losing trade for me. And Marvell could be a losing trade for me as well. So as the S&P is pulling back, so did NVIDIA and Marvell. The other trades aren't really, I'm not too worried about. It's Palantir, and then I closed Uber, and then I opened that Hood position there for $35. So I should be collecting around 17 or 18 on that. So NVIDIA has earnings coming up on August 28th. We have a pullback here. We can see on the week, big red candle. We broke the 8 EMA on the weekly chart. that's not a good thing to see. So we can see the put spread that I've got is at 122 for the short and then 123 for the long. And the price now is at 60. I'm wanting to close it at 17 and I opened it at 34. So it's not looking good for NVIDIA unless it does actually pull back up off of this bottom and recover the ADMA. So this week is going to tell whether or not we're actually going to win on this trade. And if we don't win, it'll tell us how much we'll lose. And I plan to hold on to these until 21 days to expiration, but I could close them early depending on what happens. And we see that Marvell is pretty much the same, but it looks like it's trading in a range here. So it's not breaking anything that's surprising. It's been up and down on the ADMA and the 21 EMA. It's above a rising 50-day. So it's hard to read this chart when it's basically just barcoding noise. So it's really just trading in this range. And we could see a push back up here depending on what happens next week, the week after. So time will tell on that. But I am expecting NVIDIA and Marvell to be my two losing trades for the credit spread strategy that I'm trying out. And then other than that, I mean, I feel like I'm printing money with the wheel strategy on Hood and Chewy because I've been rolling my puts up and then rolling them out too. So I'm just collecting money on that. So things are looking good on that. Palantir's not too bad either. You can see that I've collected $161 in premium from Hood right now. So it's looking really good. And that was just from the middle of July. So it's been like 10 days. Very good positions there. And then Chewy, at the beginning of the month, we have $137 of premium collected for the wheel strategy. And then Palantir, I recently opened up the $52 credit and then I rolled it for $25. So on that new position I opened, we're at $77. That was from July 8th. I'm definitely going to be focusing on the wheel strategy, especially with Palantir, Hood, and Chewy, and anything else that comes up that has good premium. Those have been really good positions there. Just selling and rolling puts. So if this video was a help to you, hit the like button. If you want to see more videos like this where I give updates on my small account and what I'm up to, hit that subscribe button. I'm also doing a live stream, maybe 1 or 2 times a week, where I'm going over a 0 days to expiration strategy. Keep your eye open when you subscribe. Hit that alert icon and you'll be notified whenever I go live to go over my 0 days to expiration strategy. And I'm calling it the R&D room because we're going over new strategies with 10% of my account, seeing if we can find success in different kinds of strategies. And we'll see you in the next video.